on US 100, which is NAS 100, there's no difference, they're all the same. And then as you can see, I'm on a daily time frame. I'm a scalper. I only trade on a 5-minute time time frame and 1-minute time frame, but I just want to show you an overall overview. I mean, I would say an overview of this chart, that how the market is trending. So I'm on a daily time frame, and it's definitely a bullish trend. It's definitely a bullish trend since 2017 that NAS 100 exists. See, this is the first day, 2017. It's been bullish all the way. We had some big corrections in this area and big correction here, some correction here, but it recovered super fast. You know, we constantly have higher highs and higher lows, and that's why indices are kind of you know, we're gonna be kind of biased towards buyers. But I'm not saying that you should be buying all the time. If you look at this area right here, especially if you're a scalper, you'll see that the market is fluctuating, and there are so many sell opportunities at the same time, buy opportunities. But if I'm a scalper, I'm going to show you how it looks like on a 5-minute time frame, and I'm going to compare it with, for example, GBP/USD or EUR/USD to show you what the difference is. But this is the overall image. This is a bigger size image of NAS 100 that shows you that the market is constantly going up, and it does a little bit of correction every, you know, few weeks, I would say, because all these candles are on a daily. However, I can go to, you know, even on a daily time frame, you can use a Smart Money Concepts trading strategy that I have so many videos on. Go check out my playlist that is for Forex tutorials, and then my first video on my channel is all about Smart Money Concepts, how to identify order blocks, how to you know, find gaps, where to take the trade, where to get out of the trade. Everything is covered on that video. But you know, for example, here we have a clear head and shoulder, so it means that the market is done with the correction, and now we're gonna be ready to take our buy position here and put our stop loss exactly right here. And if I want to draw my order block, it's going to be this daily candle from here to here. This is going to be our order block. So order block is where banks and institutions take their orders in, and what it means is that, for example, right here we have a clear support level. So what it means is that we have so much liquidity below this support level, and banks and institutions know that. They know most traders are trading like this, and most of them have been taught the same way. That's why they come down, they stop out every single buyer that took their position here, they stop them out, and now they go higher. So this is not on a replay mode, so this is live. This is my prediction. All your losses and winners are your responsibility. I'm not taking any responsibility for that. I'm not giving you any signal. I'm just predicting the market and showing you all the gaps and order blocks that exist right now. So another order block that we have here for NAS 100 is this one. So why is it an order block? Is because we have a huge gap between see, not a huge gap actually, because if I draw the order block exactly from the top of the candle to the bottom of the candle, you see that we have gap. We have a small gap here. It's not still tapped into. So that's why the price has to come back to this level to kind of tap into the zone, and it's either reverse or it breaks into this order block. We gotta be ready for both situations. But what I can name it right now, I can do it like high probability order block. And the reason is because it's not still tapped into. But the purpose of this video is to show you the trend of the indices, that they're constantly going up. But should you always be biased on buying and not selling at all? Yes and no. It depends on the day, first of all, and it depends whether you're a swing trader, you're a scalper, you're an intraday day trader. It totally depends on these situations. I'm personally a scalper. If I go to 5-minute time frame, you see that the market is constantly fluctuating here. See, I could get some buy positions, I could get some sell positions, but the overall bias is going to be long on indices. So if we know that the overall trend is like towards up and it's an uptrend, why not waiting for the best opportunities to take our position and go long? Why not doing that? And in my opinion, because I've been a swing trader, I mean, I used to be a swing trader for 2 years, and then after that I switched my strategy from being a swing trader to a scalper, and it's much better for me, guys. It's much better. If you don't trust me, go check it out, go test it yourself, and then drop your comment below this video and tell me about your experience. Because I wake up in a specific time, I trade on a specific time frame, everything is specific and determined. I take my trade, whether it's going to be win or a loss, and then I'm done for the day. So I literally can find out whether I'm a winner or a loser that day in literally 20 minutes or 15 minutes, and that's the beauty of it. I want to cash out, leave it, done for the day. That's the beauty of it. I don't even look at the daily time frame. I don't even look at the 4-hour time frame. I only look at 1 hour and 5 minutes to get into my position and get out fast. So for example, for 5-minute time frame, as I said, it's not on replay mode. I'm not trying to go back and show you something that's already done. It's live. We can see that we had a really good, a really decent break of a structure. So this is our highest point here. We had some liquidity here because sellers took their position here, put their stop loss here. The market, the price came down, stopped out. Every single buyer that put their position here, see, everyone got stopped out up to here. Everybody got stopped out, even sellers here got stopped out. So the market is constantly stopping out buyers and sellers. So you got to be careful with that. But I mean, anyways, we had this a major break of a structure, so it means that the market is going towards upside. And after this break of a structure, we can clearly say that we have a really good support area from here to here. And as you can see, we had a break of a structure, correction, momentum, and then you could take your trade from here, and then you put your stop loss here and your TP right here. So it could be a one-to-one risk reward ratio trade, but I personally don't really trade support and resistance because they're really low probability, and everybody do the same thing. Everybody put their take their buy position here, put their stop loss here, and banks might go down and stop you out and then go up. This is exactly what happened to me on my live trading. It's gonna be published very soon, like probably one video after this is on NAS 100. The same thing happened to me. I didn't get stopped out because I had my stop loss wide enough, and the New York market, the New York Stock Exchange market opened. It was about to stop me out, but it didn't, and then it boom spiked up, smashed my TP. You need to watch this video, guys. It's super cool. That's why I'm saying support and resistance are low probability. And as you can see, after this one-to-one risk reward ratio, we had another break of a structure exactly right here. I actually broke through this support. Boom, it came down and broke everything, and it stopped out all the buyers here, because this is what the market is constantly doing. But what I'm trying to say is that if you go to 5-minute time frame, you're not always buying. You could actually take this sell opportunity and actually take it from, for example, here all the way to here. So you know that we have buyers here that are going to get stopped out. They will eventually get stopped out because this is really obvious that we have a bank level here and also here. So here is not really expected, but this is what happened. And after that, we have higher highs and higher lows, and probably the market is trying to go up. So this is what it looks like in a 5-minute time frame, depending on based on my strategy. But if you're a swing trader, you don't even look at 5 minutes. But in my personal opinions, being a scalper is really profitable. So right now, before I go to GBP USD to show you some Forex pairs, I want to tell you that we have some liquidity here. It created some liquidity here and also here. See, it means that the market is trying to reach these levels to stop out the sellers here. This is our trend line, and to stop out all the buyers here that put their stop loss exactly underneath. And if I want to draw my trend line, which I don't really believe in this one as well, but I just want to show you the trend. You see the market is trying to reach this level, probably stopping out everyone or tapping this trend line and then go up. So here we have a really clear gap. See why? Because the market is leaving a gap. After this huge spike, we gotta wait for the next candle to see whether it taps into our zone or it just keeps going down. So if it keeps going down, we gotta wait until it comes back to hit this level, and then we take our sell position. That's one example of being short on NAS 100. So this is what it looks like, guys. As you can see, there's a huge difference if you want to analyze the market on 4 hour or daily compared to 5 minutes if you're a scalper. See, the market is as uptrend most of the times. It does a little bit of correction every few days and then it goes up again, but we are mostly on 5 minutes, and then I showed you exactly what my strategy is like and how we can trade. But if you have any question, don't hesitate to drop your comment below this video, guys. I personally get back to you and I help you as much as I can. And by the way, if you still haven't subscribed to my channel, do it right now and turn on the notification bell, because I upload so many valuable contents on a daily basis, so you don't want to miss out on them. And I don't have a course to sell you, so everything is 100% free of charge. So that's a really cool thing. I mean, I'm happy that I'm recording this video because it's live and I can see that how the price is going to react after hitting this level. But you know, I don't want to take too much time, guys. That's not the purpose of the video. I'm gonna show you some forex pairs and show you that it's always trending. It's not an uptrend like NAS 100 or US 30 all the time. They are fluctuating every single day. So for example, the past couple of weeks, even I would say a couple of months, Euro USD has been bearish. We have lower highs, we have lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So for the past couple of weeks. However, before that, the market was bullish. See, what I'm trying to say is that it's impossible that forex pairs are always uptrend or always downtrend. It's impossible. That's the difference between forex pairs and indices, and that's the reason indices are easier to trade rather than forex pairs, because you know that you have a clear trend, you know that you have order blocks, and you know that you are kind of more biased towards buying. So that's what it exactly means. And one more tip that I would like to give you is that if you want to find out the bank's level, you got to pay attention to the increments of 125 pips. So for NAS 100, for indices, increments of 125 pips is where banks levels are, and you can easily wait for the price to get to those zones, and then you can take your buy position or your sell position. That's a really good thing that I would like to add to this video. And yeah, for Euro USD, you know, sometimes it's fluctuating, it's one of the forex pairs, sometimes it's uptrend, sometimes it's downtrend. And if I want to go back, you see that we have a huge downtrend for Euro USD right here, and on the other hand, a huge uptrend here. So it's not like indices, guys, it's constantly going up and down. That's why I'm saying you should never ever get into a trade with a bias, especially for forex. You shouldn't say that, oh, Euro USD is bearish, let's just be bearish for a couple of months. So you never know what's going to happen. It's always fluctuating. Even with NAS 100, when I want to open a trade, I'm not biased on NAS 100. But the trade that I took this morning, and I'm going to share this video, was actually short. So see, for for Euro USD, we have a huge gap exactly here on a daily time frame that never tapped into. Huge gap. So, and also we have a huge break of a structure here. So it means that the price is trying to reach this level. After having a correction, we take our buy position up to here, but we got to see what happens. Yeah, this is for daily. Even if I go to 5 minutes, you see that I got to wait for, oh, I have 2 alarms here. I didn't know that, so I'm going to remove these ones. Yeah, we probably need to wait for this level because it's very, very choppy. It's going up very weirdly, and then after that we can take our buy position all the way to here to tap into this one. So that's it, guys, for this video. I hope that you got some value from this video, you know, comparing indices and forex pairs. If you did, give me a thumbs up, subscribe to my channel, and turn on the notification bell. And if you want to trade completely hands-free, and you don't want to analyze the market, you don't want to open and close trades, you don't have enough time, or you don't have enough knowledge, don't worry about it. you can literally do everything with a Forex expert advisor that we provide to you that especially trade gold. You can take it from smarteaincubator.com. But if you have any question, drop your comment here. I have so many free videos here that you can use, and hopefully you can become a profitable trader. So thank you so much for watching this video, and I'm out.